Good morning, good afternoon, good night. Welcome back to another schema scalper video. In this video, we're going to be looking at seasonal tendencies and how to use them and how not to use them. Let's get into it. Okay. So you see on my screen right now is British pound to US dollar seasonal tendency. Now this right here is a Forex seasonal tendency. We do not want to use this. This is of, I'm not going to say no value because there is value behind it, but it's of very little value, and I'll show you exactly why right now. This is what I switched to now, British pound futures seasonality. So this is the futures market for British pound. This is the seasonality of the futures market. And what you would have noticed is that the heading changed, but the information on the graph didn't. The information on the chart didn't. I'll go back and forth through it. There's very little change. So using this on its own, this one chart on its own, British pound to US dollar seasonality, it would give you an advantage, slight advantage, but this is where the magic happens. You need to look at British pound and whatever you're trading against the British pound. So for my instance, I'll be looking at dollar index. I'll be looking at US dollar index seasonality, and this will be the futures chart. Or the British pound futures, just futures chart, it's in the name. And how you use this is you look for big movements up or big movements down in starting with pound, or I usually start with pound, and then I would look at dollar if it's doing the exact opposite. So for instance, February, right? I'll just go back to the pound chart. February, British pounds future seasonality, the start of February till the middle of March. There's a huge decline. Taking out lows, there's all a line chart, but it's still taking out lows, big sell-offs, right? So what would we be expecting in dollar is sharp moves up, taking out highs, right? Between February and March. Start of February and the end of March. So start of February takes out highs, big movements up, right? Until middle of February, middle of March, and then there's massive decline down. Now if we go back to the pound, middle of March, there's a move up, but it's not as pronounced as what there is in the dollar index. And now here's where the real magic comes in. If you're looking at this chart alone, British pound to US dollar seasonality, and you're looking at January's price or January's section of the chart, you'd see buying of the British pound during this time, right? Can all agree on that. It's moving up. But if you go to British pound future seasonality, exact same move, and now you look at dollar index, there's also a move up. So you'd want to avoid times like this. When dollar index and British pound future seasonalities are moving in the same direction, you want to either, I would say, short-term trade like scalp, or just choose another asset class. Other asset class or other Forex pair during this time. You wait for times like this from beginning of February till the middle of March. Beginning of February, middle of March. So all through this time, I'm going to be looking to short British pound. Not without reason. And I'm going to say that again. I'm going to be looking to short British pound, not without reason. My reason being, every day is a new day. Pound chart, the pound dollar chart can go higher at any moment, right? This is not, nothing is guaranteed. Nothing is 100%. But on the days when I'm selling, and I've already put this in my mind from the beginning of February till the middle of March, if I'm selling pound dollar, I'm going to hold for larger targets. And if I'm buying pound dollar, I'm going to be taking smaller targets. So maybe if I would originally hold 1 to 5, I'd now take a buy with a 1 to 3 risk to reward. And if I'm selling, I would now take much larger rewards comparing to my risk. And you'd see that in the previous video I made. I think the title was 5th November GBP USD trade recap, something like that, where I caught the high of the day. And it's quite easy when you have this idea already ingrained in your mind that the charts over the past 20 years, this is 20 years range ending 31st of the 12th month, which means basically New Year's of the current year. So 20 years back, this has been happening. I'm not saying it's happening every single year, but there's a 1.5% decline in British pound, of the value of British pound. And that's about I would say a 1% increase in the strength of dollar. So it's, why wouldn't you sell pound during this time and not have more risk on the trade, but have larger targets? Because there's only two ways that this chart could end up like this. It's higher frequency, which means there are more sell days than buy days. And with that, we're already aligning ourselves to take more sells and hold them for longer. Or higher magnitude moves. So that's larger moves, larger daily ranges in the sell direction for British pound. And that's how you use seasonal tendencies. Like I'm not going to say every pair or every asset class has its own seasonal tendencies, but I'm pretty sure it does. Don't quote me on that. And where I found the seasonal tendencies is charts.equityclock.com, or you just search seasonal tendency for British pound and you make sure it's not the Forex one. Make sure it's the futures chart you're looking at. If you can't find the futures chart, keep searching, you'll get it. And with that being said, hope you guys have a good rest of February and middle of March. Hint, hint. Cheers.